What's going on, guys? Today is the 9th of December, the day before FOMC, so price is likely just going to consolidate or some sort of range all day.
Chlorophyll? More like borophyll. Right?
For this morning, we don't actually have a valid trade set up revolving around my Asia session. I'm going to sit on the charts and review price action in case we do end up getting some sort of trade for the day. Unlikely, but we can see what price does. I'm not going to be recording during my session as I want my full focus to be on trading. I hope you enjoy the video. Please subscribe and like, and I will catch you on the charts. So what I was expecting for the charts today, as we have a break of structure, sell side liquidity sweep, and we have returned to the 50% level within the current leg, which you use a fib from the high of the expansion to the low of the liquidity sweep. Here, as you can see, we are pulling back, but no full-on new break of structure. All we seem to be doing is sweeping liquidity for tomorrow's news. So we usually range for a couple of days prior to FOMC, which that's clearly what is happening. But tomorrow, I do expect us to put in some higher price action to take out the next swing high. As we are putting in continuous highs, we are still bullish overall. Unless this price takes the new low, sweeps liquidity within the leg, and then continues lower, that would be a new H4 leg. But until we break this low, if we are going to continue sweeping, we are not going to be bullish. But what I was expecting for today was price to sweep liquidity, change character, and then continue higher to take out the next again high. That clearly wasn't the case, so we are just going to continue lower, likely take out this low, then continue higher. This is where I would just stop and close trading view so I don't rush into trades that don't fit my plan. I don't FOMO into trades because I see some sort of setup, and I would usually just go work on my Discord. So as you know, it wasn't a trading day today. Didn't force anything, but that's where a lot of traders go wrong. They start with a funded account and they think that the more trades the better, and it's truly not the case. When it comes down to passing a funded, you should be waiting for your set entry models, your set higher time frame, and you could be sitting on your hands for a couple of weeks without any trades. That's the position that I am in right now, but I have no issues with watching the charts in the morning as a profitable trader anyway. But here is the absolute truth on how to pass a funded account. You might think it's solely just sticking to your set entry models, your higher time frame bias.
Wrong.
But when it comes down to it, I would say that that only plays around a 40% part of passing a funded. A lot of it has to do with discipline and sticking to a routine out with trading. It's the same with going to the gym. You'll hear bodybuilders say that 90% of the training comes down to when they're at their house eating and trying to hit their protein goals. You cannot go into the charts, be undisciplined, and rush into trades and expect to win.
Oh, you'll see, my friend!
It doesn't work like that. So you need to stay consistent with absolutely everything out with the charts, like going a jog, waking up at 6 AM every single day, doing your pre-market analysis, limiting your caffeine in the morning, getting your full 8 hours sleep so you can be prepared and mentally ready when it comes to it. And also, one of my non-negotiable rules is sticking to a 1% risk per trade. Don't be rushing into the challenge risking 2% per trade and trying to pass it as soon as possible, because when it comes to a live funded account, because you're not going to be over risking when you know that there's real money to be made. So why would you do that in the evaluation phase and get the wrong mindset going into actually passing an account? And say you're in drawdown, you should not be entering more trades, you should not be rushing into more trades trying to make it back. That is how you fully lose an account. What I do is trade 0.5% if I go into drawdown at all. Don't get me wrong, I'm not saying if I'm up 6% and I lose a couple of percent that I risk down to 0.5. No, your starting balance, anything below that, you should be risking 0.5% so you don't fall into a bad emotional state. But anyways, I really hope you enjoyed this video. It's a bit different to my last ones, and I think this is the sort of format that I'm going to be doing as well, because I really quite enjoyed it. Something different. You still get to learn within the video, and you get to see part of my routine. But I will catch you in the next one.